The following program was pre-recorded and the views expressed do not necessarily represent those of this station or its management.
Gather round. It's time for your Real Estate Chalk Talk with the Hittner Group at Coldwell Banker Burnett. Listen closely as your coaches discuss the culture, the economy, and the political scene, and how it affects your home and your real estate investments. Real Estate Chalk Talk is where you learn the science of buying and selling real estate and the art of living in your home. Your education begins in 5, 4, 3, 2, 1.
Hey there, welcome to the program. This is your Real Estate Chalk Talk coming to you from the Hittner Group at Coldwell Banker Realty, hittnergroup.com, HITTNER Group.com. 612-627-8000 is the number to call. 612-627-8000. Mike Hilborn's in the studio today. Instead of Junior going to give us the blow-by-blow, got to have somebody in here telling me why I'm wrong. And Junior usually does that, but Mike's in. I'm sure you'll do a fine job of criticizing everything I have to say. We're in the middle of the summer. It seems like it's just the market has kind of slowed to a bit of a crawl here. A little bit of activity, but kind of slowed down a little bit. And this week we've got 5,470 properties on the market in the 7-county metropolitan area. That's actually up.
Is that up a little bit?
Up 17% from the first of the year.
Okay.
Up 17%, but from 2020, well, pre-pandemic, let's say 2020, that's a 23% decrease in the number of homes on the market. There were about 7,000 homes on the market back then, so now it's.
What would you like to see on the market right now, Keith?
I'd like to see.
If you had your druthers, 10,000 again back in the day?
Yeah, I'd like to see 10,000 homes on the market is probably a pretty good number. 15 is better. That does produce longer market times, but it gives the buyers a little more of a chance to see some variety in the listings and give some market times so you can actually do the work that you're supposed to do.
Okay.
I think it's, again, we've talked about it a million times, it's more of a function of interest rates than anything. If rates went down right now, it'd be a disaster for the market because there's so much pent-up demand of people who want to buy but aren't buying because of high interest rates.
Right.
And so if all of a sudden you had 30 or 40% more buyers come into the market, it'd suck that inventory right down. They're actually expecting us to lose inventory now the second half of the year.
Okay.
As new properties come on the line, slow down, and then the people that are out there looking can start picking stuff up. So that's not really good news. Our real estate market, in my opinion, right now, is about as stable as I've ever seen it.
What do you mean by that?
Well,
stable.
There's been some articles out there, and there's some concern that maybe we're going to go into. And my wife keeps telling me, "Well, we're going to see more foreclosures. We're going to see some foreclosures." And why would you see foreclosures? I don't understand why you think you would be seeing foreclosures.
Well, she's probably referring to the fact that there was a moratorium on anybody being foreclosed on during COVID, and now those restrictions have been lifted. Right. So now people who are just like, "Oh, I can't make my payment. I lost my job." Those things will come into play now.
Yeah,
that's
such a small percentage.
It's 8. There's 8 of them.
Yeah,
I don't know.
I mean, it's a small percentage,
yeah.
But when you look at the market as a whole, just in terms of stability,
right?
There's so much equity. We mentioned it last week. There's $1 trillion worth of equity in homes in the market right now. So the equity position that most homeowners have, unless you bought last week, is tremendous. $100 and some thousand in equity in the house, and then you're sitting there at an interest rate for the majority of the homeowners that still have a mortgage. Remember, half the
under 4
are under 4, so they're in such a great position. Back in 2008, interest rates were still not bad, but they were a little bit higher. The equity positions were not quite as strong because there was a lot of minimal down payment mortgages out there and a lot of push on refinance, and so there's first and second mortgages and those kinds of financing things in play. That the equity position wasn't so great. So when their values drop, people see that they're quote unquote upside down on the house, and they do. Kelvin and I were talking about this morning, is strategic foreclosure. So they
Back
would
in the day,
they
yeah.
would go buy something else and then let the property foreclose, which was a silly notion when you look back at it in retrospect, because that property now is double in value. At any rate, we don't have that now. Now you've got so much equity in the property that it seems to me like if you were in trouble financially, if one of the wage earners lost a job or their wages have been reduced for one reason or another, you would give up the boat first. Sell the boat.
Right.
Get rid of the second or third car. Get rid of the Corvette that's sitting in the corner. Do anything. Go get another job before you would let that house go back, because you have so much money. And back then you could buy another house and have that house, your payment would be less than the one that you were currently in. That was the whole thing.
Well, I just saw a YouTube video on repos
Okay.
of cars, and it's way up, right? So maybe people are doing that because they were getting all that money during the whole thing, and then they bought a bunch of cars. And that was really interesting is how damaged the cars were that are getting repossessed.
Oh, really?
Well, I think they're just not making payments, and they're just saying whatever.
Yeah.
And not
So
taking
they're
care of it, no maintenance.
Yep,
Or
and
just
then-
beating on them.
Yeah, and just dented up and broken, cracked windshields and a whole bunch of other stuff. And then the point of the video too is that there is such a lack of tow trucks and repo people that in this case what they were talking about is how Wells Fargo's paying a premium to get their cars back now because it's going to get worse.
Oh.
What do you mean by worse?
More people are going to be defaulting on their cars because they
Yep.
just, the prices were insane, and then people were buying things, and now
At
they can't
8%
make,
interest.
and maybe they're making their payment on their house,
Yeah.
to your point, and they're letting their car go. And then it's like, okay, I'm just going to stop paying. It'll take the bank how long to take it from me? And if there's a shortage of repo people, what does that look like?
Right.
Because I've been kind of waiting to buy some used trucks, for example.
Okay.
It's like, okay, because they went way too high. They're so expensive, the brand new ones. But I've been waiting, just like, okay, in the F-350s, so we have specific needs for what we're doing. But at F-150, we'll do some things that we don't have to have something really high-end for. And I'm waiting for the market to drop out.
And that's an opportunity. Funny you mention that, because I have two guys I know, business owners, that are doing, everyone's got a side gig, right? I mean, even business owners, they got a side deal going on. They got their business doing this, and then, it's like you got 6 businesses, so you start another one, you get into that. Well, they're buying campers and motorhomes, and because people bought them during COVID.
Okay.
And now they don't want them anymore, and so that they're letting them go back. So they're buying these things at auction,
Yeah.
and then cleaning them up and all that, and flipping them.
Huh.
Actually flipping them,
Flipping campers.
flipping campers.
Yeah, it's a fascinating time. I was at a customer about a week ago that was talking about how they were asking a competitor of mine to do more work for them, and the competitor said, no, we're maxed out, we're done. This is as much work as we can do for you. And then there's weird things like that going on right now.
Yeah,
where all of a sudden we're picking up stuff. I mean, I'm buying 2 more. We have 5 of these fleet trucks that carry 1,000 gallons of water. I'm buying 2 more. Who would have thought that was going to happen right now?
What do you do with those?
We wash
we talk
trucks
about
for
that
like
next-
Oh.
Let's talk
FedEx.
about that when we get into
Yeah.
the segment.
Anyway.
Let's finish up on the real estate, Keith. We've got
so
2 minutes.
So 2 minutes now. So what does it look like this week in terms of the move through? We have a new sold houses, about 1,100 houses. Last week is about 900. Week before that is 1,100. I mean, it's just like steady.
Okay.
It's just like slow and steady. That's down about 30%. It just remains down. Got some numbers back from the first quarter. Pretty interesting what we're talking about with flipping. 10% of all the properties sold in the first quarter were homes that were flipped. So the flippers are still out there in large numbers. That's down slightly from pre-COVID, but it's still a huge part of the business. When you look at 10% of the homes that are sold to people who are going to flip them. And the margins are down from that standpoint in terms of the people who are actually working in that market for a living. The margins are down a little bit, but they got to do business, and so they're just mustering through it. It's still pretty good business to be in. if you can find the properties, and obviously they're not having trouble doing that. The average price is like $250, and then they're selling them in the low 300s. It's right in that sweet spot, so they don't have any trouble getting rid of anything. The margin's good. Averages 20 to 30% margin on a flip like that. Not for the faint of heart. Not for the if you're listening as a consumer, don't run out right now and buy a house to flip, because if you don't know what you're doing, you can easily get killed in this market. But if you do this as a living, you've got your vendors in place, you got your supply line set up, and people like buying them. That's the thing. When you're working with a buyer, they like buying a house that's been flipped because it's got new appliances, it's got new mechanicals, it's just been gone through, it's move-in ready, and they like it. This is your Real Estate Chalk Talk. We'll be right back with Mike Hilborn right after these messages, and we'll get into the business side of life in 2023 when we come back.